Friday, September 27th, and this is Market Analysis, Stan Ehrlich. Today I'm also going to go over the October lows, the complete history of it since 1993, to show you why I am expecting some sort of significant buying opportunity in October. But we'll start out with the stock market indexes as usual, and I'll intermingle the October lows during the indexes discussion. And we have some current signals and trades in some futures. Our interest rate move is behaving very nicely so far. So here we go. E-mini, daily data, overbought, could have something like a double top, but it's a little too high on this rally, and this was very much unexpected by me. When we were down here on September 9th, I was looking for a very minor rally because of its oversold condition. I'm sure I said that, but I was not expecting this bullish engulfing to produce such a big move up. So here we are, but now you can't turn the clock back. But now we're overbought. And in new high ground, very susceptible to a downside correction. Now, I'll get to the October lows in just a couple of minutes. So the short-term chart shows us a rally this morning, didn't make any higher high than yesterday. A bit of a break down into the support area, very nicely, from this session's activity. That would be from the beginning of last afternoon, and now bouncing a little bit at the moment. So I am looking for some sort of a turn down so I can get my October lows. Again, I hope, I expect, history shows us there's a very, very high likelihood that it should, no guarantees, happen again. Let's go to the spider. Not overbought at the moment, but we were overbought a few days ago. And we could have no signal, not overbought within the last several days. And as a result, we can't have a bearish engulfing red sell signal. But if we were to rally today into new high ground and then all of a sudden reverse to have an outside down day, we will probably get overbought because we're so close right now. And then the signal would occur. But again, premature, not happening. I know what to look for, but you don't get what you want all the time. Never make the market do what you want it to do. You always have to move with it. And the short-term spider opened 6:30 California time, dropped off a little bit, rallied, no new high, came kind of close, but no high, new high, and dribbling off somewhat. Now, overbought the last 2 days in the QQQ. Inside trading range day today, doji, doesn't mean much. Down on the day a little bit, but we did get overbought in a resistance area, and that rally high, like I mentioned yesterday, closed an old gap. Interesting. But then we opened below the close of yesterday, down on the day, can't get much strength out of the rally, dropped off and made new lows this morning, and we're bouncing a little bit. So if we start to get below, I would say 484, and of course, to begin with, 485.80. That could look a lot more bearish, but I'm not going to get a signal. Next, we got the NASDAQ. We got overbought. We got up to very close, not quite, resistance levels. Those are my yellow lines or a yellow zone. So we could turn down. Now, I've been saying that the last week of September historically has been a very bearish week, the most bearish week year after year on the average historically. Well, it certainly looks like this week is not going to be the same. So it's not following the norm. I certainly hope my October lows are going to continue to follow the seasonal tendency, you could call it. So we'll find out in a moment. NASDAQ 1-minute chart. Let's squish this a little bit more and rescale. No higher high than yesterday. Came down very close to yesterday's low, but it won't be a reversal. It'll just simply be sliding back down. Okay, at this point, I am going to bring in TradeStation. That was Ninja Trader, and we'll go back to Ninja in a moment as soon as I get my TradeStation to cooperate here. Okay, good. Got it. Now, I got 3 miners, one on the left, one on the right, and this one in the middle. This is the history of the October lows. And I've done this on a couple of different Fridays this month. 1993, October 8th. 1994, October 9th. These lows, by the way, are not necessarily the low for months and months to come, but they many times are. All I'm saying is that during October, there should be some significant buying opportunity to provide a good, profitable trade. Sometimes they're whoppers. It depends upon how you stay in the trade. Absolutely. Have you got a slow moving stop? Are you an investor? Are you very patient, etc.? Then you get long-term trades occasionally that turn out to be gigantic. If you're a short-term trader, a scalper, or swing trader, or in general short-term, those are the typical terms that are used, then you may not necessarily get a big trade out of it, but you'll get money out of the market a little quicker. It depends upon what? Your personality, your trading style, how you go about trading. So all I'm saying is some sort of decent low in October. Occasionally, they are incredible, not necessarily 1993, 1994, not bad in 1995, October 10th, and two of them actually in October. I guess the best one was October 10th. October 29th, 1996, a whopper in October 28th, 1997. I'm just going to start saying October and then move my cursor to the next year. That's the next green bar. The green bar occupies the October timeframe, and in that timeframe, we're seeing these spike, usually spike low. So October 98, 99, October 18th of 2000. We haven't missed an October yet. So let me drag 2000 all the way to the left. There we go. Now September 21st, very close to October 2001. So that's the first not October low, but you got to admit that's awful damn close. October 10th, 02, September 30th, very close to October for 2003. And actually our third and well, not yet. October 2504, October 05, October 06, October 07, October 08. Try to go a little faster here. This is rather incredible. October 09, 10, 2011, 2012, 2013, 2014, September 29th, 2015. That's the third. And now we'll get into current, not quite. October 16, October 20, 2017, October 2018, 2019, 2020, 2021, 2022. I mean, this is getting boring. The October low, by the way, in October 13th of 22 was incredibly profound. The bottom of a 1-year bear market, almost a full year, started in very early January for most indexes and bottomed out in October a lot lower. It's too bad I didn't hit the bottom of the COVID crash, but that happened in March. From February 20th, I think it was, 2021, to either 20 or 21, 1 month later, almost exactly. The COVID crash. And that's the COVID crash right there. At the time, it looked unbelievably huge, but in a matter of perspective, it was just a gigantic, very, very fast correction. So last year, October, will it happen again? We're going to find out. Push trade station back over to the right. Ninja, here we go. NASDAQ did make a lower low already for today's session, which started yesterday afternoon, and not higher than yesterday's high, so we don't have a bearish engulfing. And we're not getting lower than yesterday's lows, which is a little double bottom intraday. So I got not much for signals today. Some are up, some are down. Right now, I think pretty much they're all down. No, not the DIA and not the YM. Next, we've got way in a new high ground for the YM, currently trading around the previous high of the move 2 days ago, which we did have a bearish engulfing 2 days ago. The system got short. We're out of our trades. We lost a little money. Not all the trades lost. We have a day trade scalp. I'm showing you here. Got short on Wednesday at that price. Got out on the close. Our trailing stop, which moves very, very fast, never got hit. Otherwise, we would have gotten out with a profit or loss before the close. But it's a scalp. Code knows that. And if we're in the trade, it gets out just before the close. Okay, so one of the trades was very profitable. The one scalp. Next, Russell, pop-up rally, up a little on the day. Doesn't mean too much to me. RSI, neutral territory. Next, Russell, short term. Okay, let's go to bonds. Bond market. I have been talking about a move down into the October lows. I think the move down could be down to about 118. That would be the middle of this time frame, and the yellow line right there kind of depicts a very, very rough slope. If I get anywhere inside this green circle during next month, which starts on Tuesday of next week, I'll be very, very happy. Then I want it to turn around and start a long-term bull market. We are, I think, building and not quite finished yet. After October, November, we're going to see if it works. A double shoulder, October of 22 and March of 23. Head and shoulder bottom, the head being October of 23. And the first shoulder low is a little sloppy, a little off alignment timing wise, but there it is. And that was basically late March, April, even May, June of this year. And here comes October. So if we do get a bottom, not even necessarily in the green circle, just as long as it's down pretty decently, I'd have to say down to 21 or under. That would work for me. Then up, big bullish, long-term, huge pattern, upside objective on a small version, which has been doing fine, and I expect it will continue to do fine. I expect this neckline represents the upside objective minimum of 140. But if the big pattern does work, and I'm now going to duplicate this and actually measure the distance of the other head and shoulder bottom, and that hasn't finished yet, remember. The breakout should be in the future. I'm going to call it a potential breakout, and I've already done some measuring here. I can see that. Probably, I don't know, something in that ballpark time-wise. And this would be the minimum upside objective, 150. This will go way into next year. What about notes? Absolutely, emphatically, the same story, different prices, same timing, same reasoning, same pattern. So if one works, probably the other one will, or vice versa. So this is very important. I need to have some kind of a low, I hope in the green circle, coming up this coming month. Crude oil got up into resistance somewhat, backing up, probably going to test the lows around 64 very soon, next week, and maybe even lower after that. The key here is longer term, probably bear trend. The tendency is the highest high, a lower high, and a bearish engulfing smack dab on top exactly June 14th of 22. A lower low, a lower high, and then a lower high, and then a lower high. That's part of a description of a bear trend. But you're also supposed to have the lower lows also periodically during those time frames. We don't completely. So it formed a pennant, but we broke out of that to the downside, came up to the bottom, plus a little bit more, and now we're dropping off. So the pennant says probably down to about 50. Next chart, natural gas. Bearish engulfing earlier, but now we have a bullish engulfing, but we're not oversold, so I'm not getting a buy signal. In fact, we were just overbought for the last previous few days. And sometimes these bullish engulfings, when you're in an overbought condition, do turn the market down. It's a very rare circumstance. I've noticed it over the decades that I've been trading, 5 of them. So this I kind of call a bass backwards reversal. It's upside down. It's not supposed to be bearish, but with the overbought condition at the same time, and we're fiddling around in a resistance area on top of that. I don't know. Let's keep an eye on this. I'll not make much more of a comment about natural gas until maybe Monday. The heating oil couldn't even get up to resistance, didn't even get overbought, and it's starting to turn down. No signal at the bottom, but we did get oversold. I don't know. This is also a little ambiguous, but the trend is your friend. So I have to go with a bearish tinge to this. Testing lows and making new lows looks like the most likely proposition. Could there be another little rally in the meantime? Maybe. Is it going to do anything to the upside profoundly? Probably not. Next, gold. Overbought, no reversal, just starting to slip today. Lower than the last 2 days of lows. So we could be turning. Too bad I don't have a signal. I'm starting to get a little bearish in gold. I've been a little bearish because of the overbought condition, but not screaming bloody murder yet. But now I'm starting to scream a little bit about being bearish. Move down should be at least to 2567-ish. We'll see what happens after that. Mostly, this is a bull market, obviously. And all you're doing is getting overbought, which is normal periodically in a bull market. So support could hold. We'll see what happens. Silver, overbought, no reversal, in a resistance area. I talked to you about this yesterday, down to new lows the last couple of days, probably starting to move down, and it could be all the way back down to the support area, 27 or so. I wouldn't be terribly surprised. Our first stopping point would probably be a bounce off of about 30 1/3. Some support in that area. That looks pretty good. I'll put a marker in there later. We're looking at platinum in resistance, close to being overbought, not quite. The last time we were both overbought and at the resistance area, it did turn down for a week. So I'm looking for a downturn, but not yet. Could be starting. Can't tell. Let's watch it. More comments on Monday, of course. High grade copper. Double bottom. Bought it. Both the first low, almost at the bottom. Bullish green engulfing buy signal for ER signals. The lowest low on the second low, bullish engulfing ER buy signal. Turn back on. By the way, this trading strategy is available for TradeStation, multi-charts, and NinjaTrader. And I'm using Ninja to show you. Been using Ninja a couple of years now, and TradeStation 30 years. Okay, so, and it was originally called Omega Research before the year 2000. All right, so upside objective has been fulfilled yesterday. Excuse me. So that's done. The double bottom worked, and we got great signals on both lows. Can't get too much better than that. So now what? Overbought for the last 4 days, including today. Actually, add 3 more to that, 7. So It is likely to turn down. I'm trying to get a signal. All I have to do today, and it's a lot to ask, is go down below yesterday's low because it's so far down there. So I'm thinking that's not going to happen. But the objective being fulfilled and the overbought conditions make me keep a close eye on it. Let's put it that way. Next, outside trading range day to the upside. I just talked about this a minute ago. In overbought conditions, could develop into what I refer to as a backwards, meaning backwards reversal, but it's not showing any signs of going down at the moment, but that won't happen until probably Monday or Tuesday. Monday, probably, if it works at all. So I'm not doing anything. I'm still thinking we can get up to 1104.5, and it's on its way up there. And the reason is my buy signal down here, almost at the bottom, August 26th, has been working great. Now, just because we got a sell signal does not necessarily mean we get out of long positions. We got out of any signal that we're in a position, a trade, as a result of the signal with a stop, not because of a conflicting signal in the opposite direction, which could stop us out very quickly. But if it works correctly, it would. Okay. I'm not reversing because of a signal that says we're supposed to stop going up and then go down. This one did go down only for 2 or 3 days, but then look what happened. So if you're still long from the original buy with a slow moving stop, great. Okay, so I think there's some indication here that we might be very close to turning down. We'll see. I can't pin my, hat on it at the moment. Yesterday, a bearish engulfing signal in soybean oil. Great. Got short right there, 42.95-ish. Current quote, 42.48. Got about a half a penny in it, half a buck in it. Looks fine. Trailing stop coming down very nicely. Looks fine. Still have a little bit of a loss if I get stopped out, but not anywhere near the original risk factor, loss factor. So all we have to do is slip a little bit more, and we'll probably be locking in a profit even yet today. Maybe, maybe not, but I hope next week, very soon. I like the way this is acting. Signal's good so far. Plenty of room for profitable trades, short-term and intermediate at the moment. It's only been 24 hours. We'll see what happens. Downside objective, minimum 40.72. Good support. Then 38.60-ish, and maybe lower. Who's your friend? The trend's your friend. What's the trend? Oh, obviously down. So it could even make lower lows, but it's getting pretty cheap historically. Meal on the way up, doing great. Got overbought again today, pretty substantially, hit about 80 almost, and at a resistance area, but it managed to work through it. And it is a new high for a rather large time frame back to May. So I'm thinking the rally is going to quit soon, and we're going to turn back down. But don't jump the gun. Corn, minor new high since the bottom. At resistance. Trend is down, so where is the rally going to stop? Maybe right here. It won't be because of overbought. It'll be because of resistance, and there's quite a bit of it in this ballpark range, all the way up to about 433. So there's a chance it could rally another 10, 15 cents. If it breaks above the resistance area, well, then you got another whole new ball game at 460 for resistance, and even starting a little bit more at 446. I just can't get bullish intermediate to long term on grains. A little friendly on a short term, 1 or 2 maybe week basis, few days, but there's nothing here that tickles my fancy for commenting about long term bullish. Okay, wheat, same story. Got the bottom of the market to the exact day in wheat, and when I say the bottom of the market, I mean the low day. So this was almost the high. I said almost. Great sell signal, great buy signal. When they don't work, and that's a sell signal, we get out very quickly. And this is 100% automated, you know. And here we go with cattle. Brand new sell signal yesterday in cattle, failed by the end of the day. So we did not have an outside down. It actually was an outside up, but at a significant amount of time yesterday, it was a bearish engulfing ER sell signal red. But by the close, it killed the signal and therefore killed the trades, and we're out with a day trade loss. Today we have another higher high, so we're kind of glad that we're out of the trade at that point. And the current quote is down 18 ticks. So if we get below yesterday's low, we'll have another brand new signal back to back, which is very rare. Usually there are a few days between, if not more than a few days, maybe months. So I'm looking at this as toppy, overbought, resistance, one signal that didn't work. A lot of the time we get signals, and that one didn't get a signal on the close. So it's really not an ER signal. Sorry about that yesterday. But look at hogs. Miss Piggy's got a bearish engulfing ER sell signal right now as of the current quote, 73.50. We got above yesterday's high. We got overbought 2 days ago. This should be, I think it's the start of a move down, probably to 67.45, maybe 65.82, but in this yellow zone. There is a double top forming. It is now starting to look a lot more plausible, likely, usable, good formation. Downside breakout would be at 70.5. Minimum downside objective is supposed to be a little under the support area, 65.25. But, you know, if I get super close, good enough. But it can go 2 or even further lots of times. So that's the last one, Miss Piggy. Let's look at the E-mini again. Currently down 9. That means the spider is probably down about 90 cents a point. And I got nothing here that looks fantastically bearish. The YM has been the strongest, the quickest, the best, and it's still up on the day. I really want to see the YM start to lose a lot of ground and start to slip down. And that'll help push all the other indexes already a little lower in most cases, lower, faster, better, quicker. You guys have a great weekend. Profitable trading to you.